pound New Zealand is doing? Breaking out. We know there's room to go higher on this one. This is one we've had on our radar for a while now. So trend continuation happening on here. We got our one pattern here. We did not get our back-to-back. So that stinks. But we've got a potential, seem like Euro Yen, a big trend continuation opportunity here. Again, let's mark off our higher level of structure. Let's take a look at where we're currently trading at right now. We know that we just broke structure to the upside. Make sure I'm not missing anything over here. Yep. We just broke structure to the upside. Like many of our pairs, we've seen these massive rallies where we've had a bunch of green candles in a row. We know that there's going to be relief in the market, right? We see all those green candles in a row, right? The market has to breathe, right? That's what causes the ebbs and flows. There's going to be profit taking. There's going to be a slowdown in buying pressure the more expensive price gets. So there's going to be a pullback. Our job as traders, if you're a pullback trader, is to not get sucked into doing anything dumb during this area. Okay, yeah, it went up, you missed it, you're not involved in it, big deal, right? See if you can catch the next opportunity. So after it gives us a little bit of a breath, a little bit of a pullback, see if you can catch that next move up. And that's going to be a pretty decent opportunity. So another one here on pound New Zealand. Nothing to do right now. Just wait, be patient, woosah, right? But in the future, could be something big for the radar. Now, again, only problem this week is we got Bank of England stuff coming out and all this other news. So hopefully that doesn't kind of kill the opportunity as we see prices explode. But just from a general technical perspective, these are awesome trading opportunities. So pound New Zealand with a big spread, of course. This would be another one too where, and I haven't done any research on, let me just see something real quick. Bank of England expected to hike by 25. Was that always the expectation, or was it 50? I'm not as familiar with that one. Do you guys know? Was it 50 and it went down to 25? That's what happened with the dollar. This would be one where so if we're thinking of home run trades here, let's say that it was expected previously, and this is easy. You just do research on it, right? Go to google.com/news and enter Bank of England monetary policy or interest rate, and you get all the articles in the world. So it takes 30 minutes of research, right? But if the initial expectation prior to about a few weeks ago was 50, and then after the last few weeks, or last week's and the week before, maybe the expectation said, hey, 25. If they then decide to hike by 50, the market's going to react. And it should react in a very positive way for this pair. Especially if the dollar doesn't hike by 50 the day before. And that would open up your door for, not that this is, it's a big trade. Yeah, it's a big trade. But that would open up the door for that big move up to $1.99 or twos. So that would be an example of using your fundamentals and technicals in a blend that makes sense. But remember, first and foremost, this was a bullish trade before we ever discussed news, right? This was a bullish opportunity. So again, the key point is we're not convincing ourselves to do something because of news. We're not saying, oh, I think news is going to be this, so I'm going to go for it. No, this was a bullish opportunity from the technical side, right? A bullish opportunity from the technical side. And then again, following up on our Q&A conversation from Monday about home run trades, we're saying, well, wait a minute. We may have some fundamental drivers on our side as well. And we know that technicals are the destination, fundamentals are the driver, right? Technicals will tell us where price is likely to go. fundamentals will push it there either slower or faster, or direct or indirectly, right? So if we have the technical destination in our mind already, and that's what we're basing our trading opportunity off of, and then we happen to have, hey, we may have fundamental drivers that are in play as well, those are the opportunities where you shoot for those home run trades. Those are the opportunities where you shoot for those big trades. And again, we discussed it yesterday. A big trade doesn't mean like, hey, I'm taking everything off at a high level, or like, I'm not taking any targets off, I'm going to let it ride. No, you still want to be smart. You still want to have a target at a conservative level. You want to get your money first. Put your money in the bank. That way you make something off of your idea. Roll those stops to break even. That way you reduce all your risk. So you made money, you reduce risk, right? You're at the casino table and you're playing with house money. Now with house money, you're making that educated guess, that educated prediction that I think I can squeeze a little bit more out of this specific opportunity versus kind of my regular everyday opportunities. That makes sense, guys? Those are your home run trades. And they don't come too often, right? Again, I get about a handful a year, not a handful of wins a year. No, I only get a handful of opportunities a year. But if you get one opportunity, you think about your monthly return on investment, right? If your monthly return on investment, let's say you're a steady Freddy, you make a steady 3% each month. And honestly, let's be more realistic. Let's say you make 5% in January, then you lose 2% in February, then you made 4% in March, and then you lose 3% in April, right? That's how it goes. It goes up and down like a trend, right? So let's say that your typical equity curve looks like this. It's slow, methodical, and boring, which, by the way, right? Would we all kill for an equity curve like this? Yes. Internet traders would not, right? Because they want to see this. Ha! Right? Well, but we would kill for an equity curve like this, right? This is your normal return. You add one of those home run trades to it, right? Here's what it does. I'm going to change the color here so we can see kind of the differences, right? So now, all of a sudden, we have something that looks like this, where we have our normal ebbs and flows, and let's say you get one home run, and that home run does this. Boom. Then you go back to your normal ebbs and flows, another home run later in the year, does this, right? It just gives that little boost of increase where you're making an extra maybe 3, 4, 5% on that month. You do that twice, that's 10% a year. That takes your normal, 40% return, 30% return, whatever you're making, to a 50% return, to a 45% return, whatever it may be. That's massive. Again, it doesn't seem like it because 10% doesn't seem like much to most people. But if you really understand money and you really understand return on investment, an extra 10% is massive, especially if it comes off of an extra few trades. Stopped out of the DKC on the Euro Yen 15. 0 for 2. So, good one to pay attention to. Good one to pay attention to here on Pound New Zealand. This Euro Yen, 2 trades of the days. Wow. Nice. Hope you guys enjoyed the video. If you did, do me a favor, hit that like button before you head out. Also, make sure you check out the Trading Coach podcast. New episodes 3 times a week, covering the trading topic that you want to hear about the most. How do I know you want to hear about them the most? Well, because you guys personally requested. So check it out. The Trading Coach podcast, available on your favorite podcasting app. Give it a listen and let me know what you think.